What's up, guys? This is Mike here with Ninja Trading, and this is your week of July 5th weekly update. So, hope everybody had a great weekend. This update is coming out Monday, obviously, because we had 4th of July weekend. So, I know I had a great weekend, got some sunburn, so a little bit tired today. But yeah, so we're here to catch up on some Bitcoin action. So, as always, every single week, um, probably won't repeat a lot of what I've been saying for the past couple of weeks because Bitcoin's been in the same range. So I'll go over some higher term time frame stuff, some stuff if you have altcoins, and we get down to the nitty gritty for more of the technical analysis stuff. And this week we're starting to do a little bit of updates or analysis on gold as well. So we've got some updates on that. We started doing a little bit more gold in the group. So hope you guys enjoy that. So first things first, we are going to cover a little bit of what we talked about last week. So last week we said we are in this massive sideways range, and really nothing has changed for Bitcoin. As you can see, we're still in this range that I gave about a month ago. Nothing has changed there. We've been trading the range. It has been very profitable. We're being patient. Same thing that I say every single week. And just to show you proof of that, we ended the week, ended the month. So we've been in this month, or we've been in this range the whole month. Not as good as last month. So last month was the big breakdown from all-time highs, and we had a 96% win rate for 420,000 pips. We're at 280, so not nearly as good as last month, but we're at a very high win rate still. But the most important thing is, I've been saying this, right? Most people say that you cannot make money in a range, and most people get bored in a range. This range has been, a gold mine. We haven't had the opportunity to catch a massive breakout like we did, right here. But we're still, highly profitable, staying in the range. All demo money and, paper trading, of course. None of this is financial advice. I'm not a financial advisor. All trade setups given are ideas on demo paper trading accounts, of course. So, with that being said, I said this for a couple of weeks. We've been inside of this range, and I think the longer that we stay here, honestly, the more bullish it is because it does look more like bullish reaccumulation. I know last week also made a video called "Are We in a Bear Market?" It's somewhere in the YouTube playlist. But I was kind of dispelling the myth that of the Wyckoff accumulation schematic, which I'll tell you why. So I'm not a huge believer in following the schematics, but they do have some merit to it, right? Like you can say that this was a giant Wyckoff distribution simply because of the volume and the time spent, right? Wyckoff was not meant to be like a 2-week accumulation schematic, right? Wyckoff was meant to be like years, right? Months to a minimum. So the longer that we stay down here, the better. But one bullish thing that I did say last week was that we did a swing failure of the lows and grabbed liquidity. So if we look at where's the local range? Okay. So if we look at the volume profile, so let me actually show you this from what I posted in the group earlier. Where is this? Okay, so here's a weekly plan. This is what the volume profile looks like now inside of this, over month-long range. And we're now becoming a lot more balanced, and there's a lot more volume shifting towards the bottom, right? So this is how much volume is transacted. This is how much time is spent. And you can see a lot more volume shifting down. Whereas if you go to the same thing a couple of weeks ago, this was a lot more top heavy, where the bottom there was nothing down here, right? So the reason I bring that up is because if you want a Wyckoff accumulation schematic, you'd want to see a lot more volume down here, right? Because I think there's a lot of, I'm not trying to be mean to anybody, right? There's a lot of gurus out there that don't actually trade for a living. They get clicks or ad revenue for a living, which is perfectly fine. But people see these Wyckoff accumulation schematics, they're immediately like Wyckoff, right? And they don't understand the concept of it. So if you have Wyckoff accumulation, the whole point is, just like in the name, right? You want accumulation, right? So think about it. If you're a market maker, or if you're a big account, are you going to accumulate up here, or would you want to accumulate lower if you want to push the price higher, right? I think that's pretty obvious, right? If you control billions of dollars or hundreds of millions of dollars, you want to accumulate down here as opposed to up here. Why? I mean, simple, right? Because if you accumulate up in the 40,000 range, and let's say it gets pushed up to $50,000, you have the $10,000 in price action gain, right? Whereas if you accumulate closer to the $30,000 range and you push up to 50, now there's a 20,000 price action gain. So I mean, that's, for I think for a lot of people watching, that's basic common sense. But you know, people just blindly say like, hey, this is Wyckoff, without the volume backing it up. But now the more time, so I would say if we actually continue to spend another 2 months down here and you see a lot more bottom heavy, you know, volume profile, so you see a lot more bottom heavy transactions down here, that would be a lot more bullish, right? So I'm not saying that, you know, last week I said this could have been the liquidity grab to push us higher, which is true, but you know, we kind of got stuck at the point of control, and we're bouncing between the point of control of value area low, which if you watch the volume profile video, this is textbook right here, right? There's a lot of you know, Bitcoin's trading very technically, and it's phenomenal. So we did get rejected at the point of control, so we are likely to test the 32K range. I would say probably a little bit lower, but to recap without rambling on, so we started to form this local range right here. So if we start to actually accumulate more and more in this local range, like if we spend a month down here, I know a lot of people will get bored. If we spend 2 months down here, I mean, that would be a phenomenal trading environment, because you know, to recap what I've been saying every single week, we've been shorting or longing the lows, shorting the tops, right? This has been a phenomenal range. We currently have shorts from up here, actually from up here. We have longs from down, a lot of longs from down here. We have shorts from right here, right? Gave that setup for, you know, this is why we follow the weekly updates, because we have a short from right here, which was the absolute top of last week's move. And we have a long from down here, which was the absolute low, right, of the entire range. So we're sitting in a pretty position. You know, I personally haven't been trading a lot this last week because, you know, the major trades that we took were this long and this short, and we have, you know, shorts from up here. So, and we've been making a lot of great trades throughout this range. So there's really no reason to be overexposed. You know, we only take the highest probability trades, so the frequency of trades has gone down substantially, but we're sitting in a you know, position to where if it breaks either way, we have trades that will run and heavy profits. So as I was saying down here, I would really like to see this play out right here, this entry around the 31.6 31.5 range. So we have some confluences, and I'm kind of jumping all over the place, but this is a nice little entry area for a long, and I think that could be a nice harmonic to either push up to 40K or to 50K. I'll cover that more in the TA section, but overall, you know, I'm still neutral, but you know, as you can see, there's still more volume towards the top than the bottom, which is, for the range, is overall a little bit more bearish, because think about it, right? Last week, I mean, you can go and watch the replay of last week and are we in a bear market video, because this could either be, for the people that do Wyckoff, I just look at it as an either accumulation or distribution range, right? It doesn't need to be Wyckoff. So if we're accumulating down here, or if we're accumulating in this range, you want to see the volume bottom heavy, right? If you want to see distribution, it's top heavy. Why? Because the big accounts, they're entering their short positions right here, right? So if they want to push it lower, they want to definitely gather a lot more short positions before pushing it lower to make more money, right? Down here, the bigger accounts, you want to see more volume come in right here. So if we go sideways for another, you know, couple of weeks to a month, and we see this volume node really increase, that will be a lot more bullish to me, because then it looks like the big positions are primed for a pump. But I think in the immediate near future, there's no reason to, you know, be overly bullish or bearish. Just trade the range. Just like right here, right? People got incredibly bullish thinking this is the breakout, Why? Because of Wyckoff accumulation, right? There's so much memes going on for Wyckoff accumulation. While I showed you, this was our short of the absolute top right there. We had so many areas of confluence. So you see that on the 618 right there. While people were getting overly bullish and FOMO longing. Same thing with down here. People got bearish again. We were longing the fear. So, you know, people that are breakout trading are absolutely getting wrecked in this range, while people that are range trading, like we are you know, absolutely doing phenomenal. But I would still be in downside protection. I mean, you know, now we're going sideways. This is the Bitcoin dominance chart. So altcoins are, you know, doing a little bit better. So Bitcoin is going down. But look, these massive green candles for Bitcoin dominance is whenever Bitcoin trends, right? So as soon as we break out of this little sideways range, altcoins are going to get smashed versus Bitcoin. So I would still be in altcoin or downside protection. Not financial advice, but if it was me and I had a lot of altcoins, I would still be in downside protection mode, and I would definitely be in, you know, Bitcoin is most likely the safer asset for, you know, less downside if we were to break to the downside. So with that being said, you know, nothing has changed. If you want more insightful analysis on the range, I mean, nothing has really changed. You know, down here is a little bit more bullish. You know, as I said, if we did one of these and then we pump straight up, grab this liquidity and came straight down, that would look very bearish. So this is actually bullish, but you know, bullish doesn't mean is it going to break the range today? Like, probably not. Yeah, I'll show you on the local time frames, right? I mean, yesterday we had this breakout range, breakout traders got wrecked. I was showing this as a, you know, look how well that trades technically. This is a new point of control. And today it broke down. There was a naked point of control down here. You know, the breakout traders for the downside absolutely got wrecked as well. You know, just shot straight back up. So definitely breakout trading, in my humble opinion, is not the way to go. So where's my parallel channel? Just lost it, right? Okay, right here. So I would definitely like to see a little bit more sideways here. Come down to this level that I have outlined, and there's definitely an active entry on this. And, you know, maybe do one of these, back test, push up. That would look very bullish, and the longer this happens, the more bullish I would be as well. So if you're a long-term trader, you know, there's no reason to FOMO buy or panic sell in this range. Right now we're just you know, reaccumulating. So if you're more of a long-term trader, as it stands, if we keep staying here, this is probably a do nothing time, right? If you're in altcoins, probably a do nothing time as well. This was the time to you know, really redistribute altcoins in here. Now we're just going sideways, really nothing to it. Ethereum is probably the only one I'd be interested in right now for altcoins. Just all other altcoins, if we, you know, if we do one of these, your altcoin is going to get smashed. Ethereum as well, but Ethereum is probably safer than a lot of other altcoins. So, all right, guys, sorry for the delay. Literally have low blood sugar because I hadn't eaten all day, so I had to go eat and then take care of the baby. So you're gonna see a jump in the video and also a jump in the price action in the video. But I'm gonna wrap up. So hey, I can trade, but I'm not the best at you know, video stuff and editing. So you're just gonna have to deal with the little jump there. But look, okay, so long story short, we're Bitcoin's still in the range right now. This is getting more bullish, and here I'll show you guys why in the volume delta in a second. Actually, before I go over that, so we're also, can't recall if I already talked about this, so I apologize if I did, but we're forming this local range here, you know, with the value areas. So, you know, this local range is a bit top heavy in terms of volume, which is it is a little bit bearish, but not overly. So this is the local range that I would trade. This value area low lines up with pretty well with you know, slightly being above this. You know, if you guys are in the group, definitely this is the next big trade that I'm looking for. So right here. So this one, and that leads into a crab that I actually posted the other day. So this crab would bring us to 50K. So so if you're in the group, you could definitely pull that out. So we're in this local range, but let me pull up the volume delta for you guys. So we're forming some bullish divergences. So if you look at this low right here, on the volume delta, we're having a higher low on the price action plus a lower low on the volume delta. So we are forming some bullish divergences. That's not to say we can't continue to form bullish divergences on another drive down, but you know, this is not looking immediately bearish to where you know, back before this drop down to 28K where we caught the long, it was let me show you guys this here. Actually, this was getting a little bit bearish right here. So you had about the same highs and higher highs in the volume delta. So with that being said, it looks like the open interest is just being washed right now. But on every rise, we do have actually at the very top, we had 80 million net longs open up. And then we didn't have a lot of shorts open up at the bottom. So we do have buying interest towards the top, and open interest was going up over the weekend here. Actually, no, this was not over the weekend. This was over the weekend. We did have open interest go up into that short that we took. So there was some buying interest, but right now this is pretty neutral. Nothing overly bullish or bearish on pretty much on the drops. We're getting longs, you know, longs closing out, and a little bit of shorts opening up. So yeah, on these drops, if we were seeing massive shorts open up, that would be another issue. So further building the bullish case. But just to wrap it up, for the higher term time frame stuff, look, made this video that you can find on the channel called "Are We in a Bear Market?" I go over what to do with altcoin and your altcoin portfolios. By the way, dad joke pro, great cup from my wife. You know, to go over what to do with altcoins. Sorry if my thoughts are a little scattered on this. On this weekly update, had a pretty long day yesterday, so my brain's not 100% today. And so go over and check out that altcoin, you know, altcoin video. But okay, so getting down to the nitty gritty TA stuff. So this harmonic that I mentioned, so we do have, so this golden pocket right here is the local fib pull, and the 786 is the total range. Check out support and resistance part 2 if you don't know what I'm talking about here, so check out that video. But there's a ton of confluence up here. Plus we do have actually this naked pivot. Oh, almost got tagged. We do have actually the last naked pivot down here. And again, check out the pivots video. These have a 90% chance of getting tagged. So if we come down and tag down here for a long, that would be ultra bullish to go up, because these have a very high probability of getting tagged if we start coming up, and then it's going to want to come and you know, want to come tag that pivot. It's not going to be as bullish, and again, these don't have to be tagged, but just a lot more bullish when a lot of these get cleared. Same with, look at that naked control perfectly getting tagged. There's also a naked point of control down here. So this is a very, very high probability long right here. There's so many points of confluence. Plus, one other thing that's interesting. So we had so check this out. If you're in the group, we had a long entry that got front run. This one right here. This entry, so the 618. If you watch the game theory video, you'll love this one. Okay. So if you check this out, this entry got missed by like $50. So, and I'll tell you why this is interesting, right? So if you guys have been trading any assets, you guys know, or most assets, you guys probably know about gaps, right? So a lot of beginner retail traders in Bitcoin, they like to trade the CME gap. So there's a gap right here, right? So what ended up happening is this is why I had the trade because you had a lot of buyers down here wanting to buy the CME gap, and you had a lot of people shorting into this, waiting for the CME gap to close, right? And plus you had a 618 right here. So there was a lot of confluence, which is why I had a trade. But the market had a max pain scenario where you barely missed it. We do have actually, when you have merge profiles, we do have a point of control right here, which is what it bounced off of. But the market literally shot up and left all those people behind, and you had a lot of FOMO longs that are currently getting wrecked right now. So just a little bit of interesting piece of TA. But other than that, it's been, we've been trading super technically. I had so I posted this in the group. What was it? So before the weekend, I posted, these are the levels of interest. So check this out, right? The daily and the point of control right there. And that's exactly what we rejected off of. And then we come down and we perfectly bounce off of, this naked point of control, right? So, so the whole range point of control, which was a little bit higher up here, down to the naked point of control. So Bitcoin has been trading very technically. This was an obvious trade, and this was an obvious trade. I wasn't trading yesterday, obviously, because of 4th of July. And today, I haven't taken any trades on Bitcoin yet because I wanted to, get on my plans, right? Like I preach every single week, you do not want to trade without the plan. But there's a lot of trades to be had within this range. But like I said, we're literally in a long, just this local range. We're literally in a long from right here, and we're literally in a short from right here. So why take on additional extra risk in the middle right here, right? That's why. We want to wait for that trade that I showed you right here, or if we do one of these and there's still a lot of confluence right here, if we swing failure, that's another short. So those are the big trades that I'm waiting for. Tomorrow when US markets open again, because they're closed today because of the 5th of July, when they're open again, if volume starts to pick up and there's more scalps and day trades to be had, I will do it because actually next week's video too will be on Monday because we'll be out of town from Thursday to Sunday this weekend. So I have Monday through Wednesday to trade. I'll try to do some updates over the weekend. But these levels are all, if you don't know where to find them, they're in weekly plan, all through right here, right? So volume delta, leaning bullish, neutral. We do have this negative fib fan, this bearish fib fan that the 618 caught this high right here to the dollar, and the 66 could be another point of interest if we come up to the 66 right here and swing failure. The bullish speed fan has literally the 618, the 66 has literally caught the whole entire move, so that's something to keep in mind. We do have a lot of naked pivots. So this can get all taken out very easily. There's a lot of single prints on the way down too. But this is why I always say, usually if you miss weekend, it's not the end of the world, because we literally did one of these, right? We came up, so this was before, I think this was like Wednesday, Thursday, right, where nothing was happening, and we came up over the weekend. There was no reason to FOMO right here because look, the whole move was given right back. So a lot of weekends, unless if there's a volume supported move, like I wasn't even interested in any of this. Although, to be fair, that was a really nice short, but you did not need to FOMO into longs right here. What else happened this past week? But yeah, this has been a slow week. We don't really need to take on too many more trades. We've had so many great trades in this range. One of my rules is that if you meet your goals, you should stop. But I should probably stop for like the next 2 months. But I'm just super addicted to trading. But this is where you could get into the trap of over trading, giving too many setups in the range. So that's why we're a little bit light on here, which is why I've started to look at other assets to trade. So this is actually a great transition. We've been doing a lot of gold. So let's go over to gold actually. If there's any questions, feel free to reach out to me either via what is this, Instagram, or if you're watching this on YouTube, in the comments, or if you're in the group, you know what to do. So okay, so the funny thing is, look at gold. So time frames are different, but where's my channel? Do you see any similarities? So we're in the sideways channel again, and I don't think today too much is going to happen because US, it's a US holiday. Well, yesterday was a US holiday, but US markets are closed today, so you know, I thought today was going to be a slow day, which is why I wasn't too worried about pushing this out very soon. But here's my take on gold. So full disclaimer, I've been trading gold for about 2.5 weeks. So I wouldn't say I'm an expert on gold, but we have been catching. So we did catch from here actually this entire move. We did catch this right here, and we caught a sell right here. So full disclaimer, I'm not an expert on gold yet, but I've been getting some requests from members in our group to cover gold. So we're getting more and more into gold, and we have been, you know, we've had some very successful trades on gold. So here's my take on gold. Okay, so here's the parallel channel. Here's the local range for the volume, where you know, most of the volume is traded right here, obviously. Here's your higher time frame levels, mostly posted in the group. A lot of the levels are below us. The next monthly is above us. Okay, here's my medium time frame take on gold. So if this is your first time watching my videos, please know that I do not take most of these indicators seriously. I do not use indicators, but there is one indicator that I made fun of for the longest time, and now I'm kind of starting to pay attention to because of its insane hit rate, and I want this so bad not to work, but okay. That's the moon phase indicator. Look at the hit rate of the dark circle. So the dark circles are usually a couple of days early. But look at the hit rate. And I mean, this one was wrong, like completely, but yeah. So I'll just leave that right there. And actually, let me show you this. Like, I want to hate this indicator so bad, but you cannot. So the dark circle. So the dark circle on Bitcoin seems to be a few days late, and the light circle seems to be a little bit early. But so look at that. I want to hate this indicator so bad, but you can't. If you blindly just did swing trades on the moon phase indicator, you actually have with proper risk management, you actually have a decent win rate. This is insane. We're gonna change name from Ninja Trading to Moon Phase Signals Incorporated. But look at this. You cannot make this up. So what's funny is we were doing sells on gold until I noticed this. I have not put in a sell on gold this past I want to say almost a week. We had a sell on this, right? But after this low right here, I realized that the moon phases were coming up, and I did not put in a sell on gold, and it has saved a lot of money. So I personally look, How serious can you take one of these indicators? I mean, you tell me, right? Um, so, but here's the other thing. The one disadvantage that I have on gold is I do not have volume profiles. So there's a lot of things that I cannot tell, like I can on Bitcoin. But I would imagine we built up a ton of single prints right here on the way down. So I would imagine if we start breaking this resistance in this parallel channel, there's a good probability that we just shoot up, right? So here's what I was saying, right? If we break out through the channel and it back tests it, that's a decent buy. Okay, here's your levels. There's no significant, so I almost never use RSI, but I kind of have to because I don't have volume delta to look at, and I only use it for divergence, right? I don't want to go on a rant right now. I really don't. But okay, so if you see people saying that XYZ asset is going to go up or down because RSI is overbought or oversold, I would just say this is not financial. Actually, this is financial advice. I'd probably turn off their video. That's not how you. This is not to be mean, but look, that's not how you use RSI. People lose a lot of money that way. RSI can be overbought and oversold, and even more overbought and oversold, or it can just reset and go back into the overbought or oversold territory, right? I use it only for divergences, and even then you can have multiple drives of RSI divergence. So, but the only reason I use it because I don't have volume delta. So, and rent. Okay, so we're done with the moon phases. So I am leaning pretty bullish on gold because number one, this looks like a reaccumulation formation. It could be a redistribution, but if we have a redistribution, I already have preset buy orders. Where are they? Somewhere down here. At the overall range point of control. Right there. So if you're in the group, it's right up there. I have massive buy orders down there. So if we get it, I think that would be a dream because that would produce at least a pretty significant bounce in my opinion. But otherwise, it looks like even if we go down, this does look like it wants to fill some of this inefficiency and test resistance before coming down. So can we see one of these? Got another candle right here. Okay, so can we see one of these to where we hit the 382 and then come down into our, where's our desired buy zone? I think it was like somewhere around here. Yeah. So can we see one of these before going up? Yes, we definitely could. Or can we see one of these to the golden pocket? Or I would say to the 786 would be the best bull trap area. So, I mean, you essentially fill a lot of these inefficiencies. So, I mean, we're so far away from this, but right, that would be a great trade down to our desired buy territory. But that's so far away. Okay, better yet, we'll use the fib strat. So that would be a take profit right back into the range. So that would be perfect. And yeah, bigger take profits down here. So that would be on a massive swing trade level on a new trade. But I would say, I mean, this is looking bullish. It looks like it wants to come up. We're putting in consecutive daily green candles. Yeah, no divergences on, well, actually some bullish divergences on the 2-day. Yeah, this is looking macro bullish. On the lower time frames, looking very macro bullish. Oh, so real quick. So Wednesday, I'm gonna have to change it, but Wednesday I'm gonna do a live stream releasing the Ninja Fib strat. But there's a more gold specific version. Look at this. So you hit take profit 1, take profit 2, take profit 3. Look at that. Hit take profit 1, 2, 3, 4. Hit take profit 1, take profit 2. This is just, I mean, range trading right here, but it would have worked. Okay, hit take profit 1. So this is, or even if you did, I wonder if this would have worked. I would have not had hit take profit. You would have made some gains, but look at that. Okay. Boom. Hit take profit 1. 1, 2, 3, 4, 5. 5 hit take profits. Would have caught this drop if you use that strategy. This one probably you needed the, yeah, here. You would hit take profit 1 even on the way up, got stopped out, break even. Pretty good, pretty good. But okay, so what I would say here is, if you're not looking for this right here, I mean, that's, I hate breakout trading and it's pretty risky, but moon phase has got me biased, man. Look, if this is completely wrong and the moon phase is wrong, I'll never use it again. But if this moon phase, but so far the stats have shown me moon phases are very profitable. I'm gonna buy like one of those moon phase watches. I want to hate it so bad because I feel like it's such a meme, but it's been working. So here's another trade. Golden pocket is lining up with the current range low, or the parallel channel, or the value area low is lining up with the 0.5. So I would say these are two areas to look out for. So you're looking around 1768 or 1772 for a potential long if we get back there. But the one that is staring me in the face, look, we actually got this already. So the 382 plus the point of control, it's already given us a percent already, or 168 pips. So if we come down again, I would say that would be, you know, a gift right here to 1777.9. So we'll call it 1778. This would be a, if you could swing a stop loss that much. If not, you know, use your normal stop loss, maybe below this low. Otherwise, below the 0.5 and the very area low, I would say this is a pretty nice gold trade right here. So let me actually post that in the group. How long have I been going on for? 40 minutes. Okay, this video is getting a little bit too long. I think that's all I want to say about gold. I would not, so I would, the only way for me to short this or to put in a sell order is I'd want to see one of these. So you have this high with the liquidity. The only way. So two reasons, right? This looks mega bullish. You have your moon phases, because usually, I preach range trading. So you sell at the top, you buy at the bottom, which has worked out pretty well so far. I mean, this wouldn't have worked out, but on the retest would have been a nice trade. But because of all those factors, and this is coming straight up, right? After a deviation liquidity grab of the lows, which is very bullish, I would say the only time is if it does one of these liquidity grabs. Stop loss above that high, and then coming back into this range is the only time that I would short or put in a sell position. But if this happens, or even if we do one of these, right, we come up, maybe to this order block and then make a lower high, okay, then you implement fib strat. Probably want to see this hit the 618 at least, right? You can take this on the lower high and then on the way down. So if we make a deviation from the top, but same, if you've seen the Bitcoin update videos from last week, it's the same thing, right? I mean, there's more volume in gold. It's a longer traded asset, or a larger traded asset. So if you're a market maker, right, if you want to take this up and you're in this range right here, there's so many stops below this low. So this grabs so many of the stops, provides liquidity on the way up, right? Same thing. This is why I'm leaning bullish, because you grabbed all liquidity on the way up. If you want to come down now, you would do, the same thing, right? If we, I mean, can we do one of these and remain range bound? Yes, we can, of course. But if you wanted to really come down, the market makers, in order to fill their liquidity, they want to break the high, so they can either just barely break it and then come all the way down. This is more prevalent in Bitcoin. I don't have enough history on gold to see how much they just swing failure, but it seems like gold likes to do one of these. So you have the initial liquidity grab, you come up and you test it to the 786, which plays out. The 786 plays out so much in gold, which is why I made the version 2 for gold, and to do this, right? So that's going to be on the fib strat. But I think that's about it, guys. Let's have another phenomenal week. Probably nothing will happen today. All the action will happen in when we hit London session in US time tonight. So yeah, let's have another amazing week. Let's crush it. Other than that, have a blessed week. Take care.